You drew a trend line, 3 clean touches, clear direction, and it held every time until you placed a trade. Price didn't bounce. It sliced right through your lines with no warning and no respect. Sounds familiar? That's not just bad luck. It's what happens when the market stops respecting a level you thought mattered. Because not all trend lines are created equal. Some are anchored to real structure. Others are forced, shallow, or just noise. So what makes a good trend line actually work, and how do you know when it doesn't? Here's the truth behind it. Trend lines are one of the most common tools on any chart and one of the easiest to misuse. Most traders draw a line, call it support, and wait for the bounce. But not every trend line is valid, and not every touch is a trade. In this video, we're breaking down how to use trend lines the right way. You'll learn what they actually reveal about market behavior, how to spot clean setups, how to avoid weak or forced lines, and how to trade reactions like bounces, breakouts, and fakeouts with more confidence. Let's get into it. If you're drawing trend lines manually, there are a few rules that actually matter. You need at least 2 solid pivot points, but ideally 3. Pivot points aren't just minor wiggles or intrabar noise, they're meaningful swings that show real buyer or seller intent. Start from a major low in an uptrend or a major high in a downtrend. Connect the dots and extend the line, but don't force it. If price doesn't respect the line, it's not a trend line. It's just a guess. If price hasn't respected the line more than once, it's probably not valid. That's where most people go wrong. They anchor to weak pivots. They draw lines that only work on the 15-minute and ignore the 1-hour structure. They chase confirmation instead of waiting for clarity. And every one of those mistakes leads to the same thing: false confidence in a trend line that never really held weight. But strip away the noise. At their core, trend lines are simple. They give you a framework for understanding how a trend is unfolding, but they're not signals on their own. A trend line doesn't predict a bounce or guarantee a breakout. It simply maps where price has reacted in the past, not where it must react again. That's why the real edge comes from context. It's not enough to see trend lines. You also have to know how to spot when a trend line is likely to matter and when it isn't. Once you've got a valid trend line on your chart, the next question is, what does price do with it? There are 3 common behaviors to watch. First is the bounce. Price pulls back, tags the trend line, and holds. This is a classic trend continuation, but it only matters if there's confirmation. That could be a strong candle close, a pickup in volume, or alignment with something as simple as the RSI. Look for the bounce to come with intent. If it stalls or wicks around, step back and wait. Second is the breakout. Price cuts clean through the trend line. That can signal a shift, either a full reversal or a momentum push in the opposite direction. Wait for a close outside the trend line and a clean retest. Otherwise, you might be chasing a fake breakout. Third is the fakeout. Price breaks the line just enough to trigger stops, then snaps right back. That's a liquidity sweep, and it's often followed by a fast move in the original direction. When you see a wick breach the line and then a strong reclaim, that's often your sign to fade the breakout with tight stops. In every case, don't treat the trend line as a decision maker on its own. Use it as context and pair it with tools like market structure or other indicators. That's how trend lines work and why context matters. You need clean pivots, multiple touches, confirmation from structure, and you need to do it consistently across different time frames. That's where the Price Action Toolkit by Flux Charts comes in. It's an all-in-one indicator that brings together the core elements of price action analysis. It automatically draws those trend lines for you and then gives you all the confirmations you need to validate them. It marks fair value gaps and order blocks with volume context, highlights breaker blocks when structure fails, and automatically detects key shifts like break of structures and change of characters. Each feature is designed to work together seamlessly. Instead of juggling multiple indicators that give conflicting signals, you get one cohesive system that shows you the full market structure. But how do you piece it all together? Let's break it down with a quick example. We're on the 1-hour Bitcoin chart and a bullish change of character just formed, signaling a potential shift from a bearish to a bullish trend. Next, we drop to a lower time frame to look for long setups. Price rips through a bearish trend line, but instead of chasing the breakout, we wait for price to return to the bullish fair value gap it left behind. Once price revisits the imbalance, that's our entry. Place a tight stop below the FVG and target a 2 risk to reward trade. That's just one setup, but it shows the edge you get when everything lines up: structure, context, and confirmation. And the automatic trend lines? That's just one feature inside the Price Action Toolkit. This tool was built to help you see the market clearly, so you stop second guessing and start trading with clarity. If you want to start using it today, just go to fluxcharts.com to get